Hello everyone. Today's video is going to be discussing the strategy that goes into how to size and buy a position. Now, while I do think that this is important in all types of investing, I think it's especially important in the deeply cyclical, highly volatile sector that is natural resources. Before I begin, I just want to say that this is basic, but it's not all-encompassing. Many of you may know something like this, or many of you may have your own strategy, and that's completely fine. I can understand that, and I don't have a problem with it. Just keep in mind, this is for my variant of investing, and it's not the same as trading. I may get into that at some point, but not today. And again, this isn't a must. You don't have to do it this way. This is just explaining the strategy for the way I see it. Okay, now the first thing I want to start with is size versus logistics, in that this strategy is based on an ideal situation, meaning the fees are of largely irrelevant size compared to the position, and the stocks are liquid. They trade enough for you to complete your positions. Now, if these conditions aren't true, if your size is either much smaller or much larger than an ideal situation, then you'll have to adapt this to your situation because you don't want to be paying tons in fees and you don't want to be moving the market with your buying. Okay, now before we go into the buying itself, I just want to say that there's a lot of highly interesting, highly prospective, and potentially amazingly cheap stocks out there. Now, what I found is my best practice is to, if I see something that I'm getting, ooh, I really want to buy that, don't. I try and wait a while, even after I've done my research, and think, okay, well, is it still that exciting? Is there something I missed? Is it cheap relative to other things? Am I missing something? Is there a reason that it's cheap? Just things to think about. And basically, if I'm still stuck on it and thinking about it for like a week later, or often longer than that, then I'll look at it again and try and look deeper and see, do I really want to start forming a position in this thing? I just want to add an important note to this whole conversation, especially with these small and illiquid stocks that many natural resource stocks are. Don't just put in a buy order, please. You'll end up paying between more and much more, depending on the price, than what the market is currently saying that the stock is trading at. Please put in a bid. If you want to buy something, put a bid, set your price, and let the market come to you. Trust me, at least for me, it feels so much better when the price comes to you and you buy something versus chasing it. I highly recommend letting the price come. So, as to position size, I think in general, you don't want to plan your position, any position, at being more than 10% of your natural resource portfolio. Now, that is high, and that is for an investment, not a speculation, and that is a high conviction thing. The pros and the investment professionals might cringe, but keep in mind, this is for within your natural resource section of your portfolio, and it is for an investment and high conviction idea. There's going to be a lot of these things, and your portfolio in the resource sector should just be a piece of your total portfolio. So I say don't plan on being more than 10. Now, if it grows to more than 10, that's kind of different, but you want to be taking some money off, but I'll go through that later. But just don't go all in on a few names. In my view, that's unwise. Now, since everyone seems to think that all I do, because all the questions I get are about natural resources, I'm going to focus this video on that. Now, understand that within natural resources, there are two main types of stocks: investments and speculations. I view as like a full portfolio, and again, I view a full portfolio as uncommon and potentially unwise because I think having cash is very important. But a full portfolio would be about 18 stocks, maybe 8 investments and 10 speculations. The investments are, of course, cash flowing companies that are um, in either in production making money, and the speculations are projects. And the investments are always bigger positions than the speculations. So to further clarify investments versus speculation, investments are things that make money. Think a company, think producing multi-asset miner. As for speculations, think things that use up money, like things that will be issuing shares to try and advance a project. And as for sizing, the size of investments is approximately, I would say, double speculations. Now, by doing my 18 and 8 and 10 math, that comes out to approximately 8% for investments and 3.5% for speculations. But on a 65-35 split, but that's just general. Some people could say 10% for investments, 5% for speculations. Some might say less, but that's just what I generally think. That being said, if some people don't want to speculate and they don't have it in them, that's perfectly fine. I have no judgments against those people. That's actually quite reasonable. As to buying, you don't want to pick a bottom because you won't, most of the time at least. These stocks can be incredibly volatile. Don't try and pick a bottom, and don't try and just, if a stock is going down and down and down, you can wait for it to start going sideways before you buy. But that being said, sometimes it's more nuanced than that. So when you want to done all your research, you think the stock is cheap, you can maybe put in a bid for a quarter of the position or maybe a third, depending on your situation, a quarter or a third, when the stock goes slightly lower than where it is. If it gets there, fine, you buy. Then, if it goes even cheaper, and I'm talking like actually cheaper, not like 1 cent lower, you can buy some more. Then again, another tranche even lower, and then another tranche even lower. But this isn't blindly buying. I'll get to that in a second. For example, if the stock's at 220 and you want to buy, you could put in a bid to buy 1,000 shares at $2. If it goes lower, maybe some more at 175, some more at 140, $1. These things move. Or another case could be 75 cents, 65, 55, 45. It's not an exact science, and I suggest looking at some technicals when you're doing this, just to see if basically if there's been other people buying at certain prices in the past. It can help you avoid kind of trying to catch something that's just going to go a bit lower. But as I said, it's not an exact science, it's just a strategy. As I said, notably lower, not like 1 cent. You have to look on a case by case basis, but I'm talking like 10, 15%, maybe 20% lower. Remember, these things, they move. It will depend on what you're looking at and a reasonable amount that you could expect it to go down. But as I mentioned, this isn't just having a series of targets and blindly buying and hoping. Before each tranche, you have to check, and even in the meantime, you don't have to wait for the tranches. You have to check and think, okay, what changed? Were more shares issued? shares issued. Was money wasted? Were the results disappointing? Or did things not go as expected? How did the changes in the interim affect the company's value? Did it get less valuable? Or did it just get cheaper? If it got cheaper, then you can buy more. And as a final point, if the price going down makes you want to buy more, or as you buying more as part of your strategy, you have to think, okay, well, when the price goes up a bit to significantly, you don't have to sell it all, but you have to think about taking some of your money off the table, because these things could go up and down 100 times and could never go anywhere. So if you're right, you could reduce some risk. That's it for today. I hope this helps, and if you have any questions on something I said or comments, I hope to see them below. Now, thanks for watching, and until next time, have a good day. Hey everyone, just quickly, you can read this here or in the description of any video. Just remember, what I do and say here is meant to be a helpful supplement or thought filter for your research, not a replacement for it. I can be wrong, and I'm often quite early, aka wrong for a good while, which is why none of this is ever investment advice.